What's up, everybody? I hope you have a marvelous day. Please leave a like if you enjoyed the video, hit that subscribe button, and let's begin. Today I have three solid companies for you for the month of October in 2020. First of all, I'm gonna do a small update about my portfolio. You can see here. Why do I make this video about three stocks? Well, in my opinion, it's good opportunities to start investing. Why? The main stocks are down 15 to 20%. To give you an example, let's take a look to Apple. I think Apple is a company everybody know. If you take a look to the last month, we can see Apple is down or 20%-ish. So it's quite dropped a bit. Not a huge drop, of course. If you would look back to March, how much did we drop? 23%, even 30%. Let's say we dropped 30%, and now we dropped in the last month just over 20. Now it's closing day, and now it's weekend, it's closed, so we can't see what's going to do today. But let's say on Monday the stocks drop a little bit more. My first pick for you is SolarEdge Technologies. What does this company do? This company is the biggest supplier of inverter solar PVs in the US. They have a market share of 65%, with the other 15% Enphase. So Enphase, that you can see here on the right, is their big competitor because they have together a duopoly. I'm talking here about inverters, so not about a company that is installing the solar panels like Sunrun. Why do I invest in SolarEdge Technologies? Because if you would take a look to my last video about the renewable energy and the roadmap to 2050, we can clearly see that solar technology will be more useful in the future. It already is. If you take a short look to the financial of this company, you can see they have nice growth in their history. We can see 2017 they had 607 million, 2018 923 million. That's an increase of 50%, and then again 1.4 billion. Now they are up to date to hit a 1.6 billion. Why? Of course, there's due COVID. I listened to the earnings call. It's an Israeli company. Israel is now for the second time in quarantine from like 2 days ago. But their factory is in Vietnam and in Thailand, so they are not affected by the global pandemic in Israel. So that's a good thing. But of course, they are executing very well in America, and in America, it's already being very well there. So I hope they drop a little bit more. To be honest, if you take a look to the year chart, or even 5-year chart, the first time I heard of the company was 2019 January-ish, so here-ish, when they were sitting around $40 to $37. Now they are at 168. So you can already assume that I can hit my face from not investing in a company. So that's why I started a position over here in August at their top. I started very small. Why? Because I knew it's very dangerous now to open a position. But since then I'm been dollar cost averaging, and my average buying price for this company now is $198. Yes, 198, and they're currently sitting out at 986. So I'm down a little bit, but again, like I'm saying, I hope the market drops a little bit more so I can make a bigger and huger position, so I can dollar cost average. But that's it, the first pick of this week, SolarEdge Technologies. Like you can see, revenue growing, they're making a profit. So, in my opinion, a very good company. This is a company that can be a 100 billion company in market cap, in my opinion, by let's say 2028, 2030-ish. So, huge potential, in my opinion. Don't invest because I said you need to, but it's a good company, in my opinion. Let's take a look to the second company, maybe a little better known. It's also a bigger company. It's a market cap of 20 billion. It's called the Trade Desk. The Trade Desk, it's all about advertising. What the problem is with this company as well, if we take a look to the last year, they have grown from like $160 to over 515. So that was in the highest point. So they are down. Let's take a look in percentage. So the traders is down 15%. I only have 2 shares of them, but I easily can upgrade that to 5 shares, but then they need to drop a little bit more. Actually, I hope they were dropped yesterday, because if you take a look, they dropped a bit, but they recovered already. So I really hope that Monday is a very big day for the stock market, so I can buy some lovely stocks at a discount price. Because I do have some cash at the side, because I feel like the market wants to drop, but then again the Fed is pushing it and etc. It's also a good thing though, for the other stocks, but I want to buy some very nice stocks at a very better price. The PE ratio is 176, so this is very high valued. But in my opinion, if you take a look to the growth in revenue and etc. In 2016, they had 200 million in revenue with a 20 million profit already. So that's very nice in my opinion. And next year they had 300 million with 50 million profit. Imagine. Then 477 million with 88 million, and then the big one 661 million with 108 million in profits. So we can clearly see it's a very fast growing company. So that's why they are already valued a little bit higher than they are currently are. But in my opinion, it's still a good company to follow, to put in your watch list. And if you see them drop under 400 or something, it's getting very attractive in my personal opinion. Then the last company I want to discuss is not a company, it's an ETF. Now you're gonna say, wow, this guy's giving us an ETF. Yes, why? Because I'm Belgium based and I cannot buy ARK Invest. So I did some research to some other cloud computing ETFs. Then I came on the European WisdomTree Cloud Computing. What kind of companies do they have? We can clearly see that their top holdings are number one Fastly with over 5%, then Zoom with 3%, Zscaler, DocuSign, Datadog, Wix.com, Shopify, Twilio, Cloudflare, and Coupa Software. There are the 10 biggest holdings. I think it's around 30%-ish that they are holding those top 10, and the rest is all very smaller positions. But I really like Fastly, Zoom, Shopify, Wix. DocuSign is very huge in my opinion as well. So that's why I bought it. Again, as well, I bought it when the hype is coming, around here, a little bit less maybe. But again, if it drops more, I'm gonna buy it. Dollar cost averaging, these stocks that are in this portfolio, I believe these have huge opportunities in the upcoming years. Why? Because we are transitioning also our opinion in the way we work and the way we buy stuff. Cloud computing, baby, cloud computing. And that's why I made a position in this ETF. If you are also interested in this ETF, again, it's Wisdom Cloud Computing. With an ETF, it's a little bit harder to do your research in the form of you cannot follow every company. Of course, you can follow a few, but then I would rather say maybe go for individual companies. Like I'm saying, I found every company in this stock a little bit overvalued at the moment that I bought it. That's why I bought the ETF, and I'm going to dollar cost averaging. Now I'm down a little bit. Let's say I would have bought Fastly, their top holding. I know the company, but this one is down is from 116 to 83. Let's take a look how much that is. Fastly stock. They are down almost 30%-ish from their high point this year. So I'm quite happy that I bought the ETF. Of course, I could have bigger gains with a single company, but also bigger losses. So again, everybody, thank you for watching. I hope you have a marvelous day. Again, the first one was SolarEdge Technologies. The second one was the Trade Desk. And the third one was the ETF, Wisdom Cloud Computing. Again, thank you very much for watching. Have a great day. And don't do things I would not do.